Topic 1: U.S.-China trade tensions and their impact on global markets, including technology and finance sectors. The annual Global Trade Fair held in Hong Kong was filled with robots and new products, but the uncertainty of the U.S.-China tariff war cast a shadow over the event. President Donald Trump imposed a 145% tariff on Chinese imports, while China retaliated with a 125% tariff on U.S. goods. This has threatened the global economy, significantly impacting Chinese manufacturers, especially those reliant on the U.S. market, who are facing declining sales and pressure to cut costs. While Trump has expressed a desire for negotiations with China, the latter maintains a hardline stance, leaving the timing of any trade talks uncertain. This situation is having a profound effect on global markets, particularly in the technology and finance sectors. The trade conflict between the U.S. and China is contributing to a slowdown in global economic growth and a decrease in fuel demand, leading to falling oil prices. The International Monetary Fund, IMF, has warned that these geopolitical risks could threaten financial stability. Additionally, U.S. tariff policies are increasing volatility in global financial markets, potentially resulting in unexpected losses for investment portfolios. The U.S.-China trade war is having widespread implications for the global economy, particularly increasing uncertainty in the technology and finance sectors. Topic 2: Economic uncertainty with potential recession risks and the influence of tariff policies. Economic uncertainty in the U.S. is on the rise, with increasing risks of a recession. According to a survey of over 300 CEOs, 62% expect a recession within the next 6 months. This is largely due to President Trump's tariff policies, which have created instability in financial markets and instilled fear among businesses and consumers. Many CEOs report that tariffs will negatively impact their businesses until 2025 and oppose Trump's tariff proposals. This economic anxiety is leading to concerns among corporate executives about rising costs and declining revenues. JPMorgan Chase CEO Jamie Dimon and BlackRock CEO Larry Fink have both warned about the possibility of a recession, while Federal Reserve's Neil Kashkari mentioned that swift trade negotiations could mitigate recession risks. Meanwhile, investors are seeking safety amid market instability through a bond ladder strategy, which involves investing in government bonds of various maturities to provide regular income and reduce exposure to short-term market fluctuations. However, this strategy is not without risks, especially in hyperinflation scenarios where purchasing power may not be guaranteed. Topic 3: Technological advancements and the influence of artificial intelligence on industries. Recent years have seen significant technological advancements that have transformed various industries. In particular, artificial intelligence, AI, is leading innovation across sectors such as manufacturing, healthcare, finance, and transportation. AI enhances efficiency and reduces costs through data analysis, automation, and predictive modeling, while also creating new business models. These changes are strengthening corporate competitiveness and improving services for consumers. However, concerns about the ethical implications of AI and job displacement are also being raised, highlighting the need for a balanced approach to these advancements. Topic 4: China's significant trade surplus and its implications for global trade dynamics. In March 2025, China recorded a trade surplus of $102.6 billion, a result of a surge in exports prior to the increase in U.S. tariffs. Exports rose by 12.4% year-on-year, while imports decreased by 4.3%. This trade surplus has helped China offset domestic economic sluggishness, with projections indicating a record trade surplus of $992.2 billion in 2024. However, due to the trade war with the U.S., China's exports are expected to struggle to recover to current levels in the coming years. The U.S. has imposed tariff